Hello, welcome back to Chain Reaction, Cointelegraph's very own live show here on X. My name's Kieran, I'm your host today, and I'm joined by Basil Askari, the CEO of MidChains. Basil, how you doing?
Good. Thanks for having me again. It's been a while since we spoke. I think Bitcoin Mina was the last time.
Definitely. And Bitcoin's price has gone down a lot since that last discussion in December. But I want to talk about the markets with you as well, Basil. But I thought we'd discuss the UAE first. And first of all, what is going on with the UAE crypto industry right now? What sectors are attracting the most capital in the market at the moment?
Great. So that's a great question. I think, on everyone's mind would be sort of, has the war impacted the crypto industry in the UAE? And what has been sort of what's been felt by market participants like ourselves who've been around for a while and continue to trade on a daily basis, and for new startups that are looking to sort of come and set up and build businesses in the country. I think, the obvious observation would be that there's fewer people moving into the UAE during this period. I would say that it probably hasn't stopped plans from coming to fruition at some point. Maybe it's delayed or changed timelines for people. I think that's the observation I've seen so far. But as far as kind of daily business is concerned, I would say there hasn't been any real impact on those that are kind of currently operating. So for us running our institutional trading platform, we have not seen a slowdown in volume. We've not seen a slowdown of new clients onboarding or interest in working with us. And I think that's in large part due to the digital nature of our business, where it's relatively unimpacted by what's going on really across the water and on the. But what I would say is that the authorities have done a fantastic job keeping us, informed and up to date on the latest AML practices and trainings to make sure that we're on side during this period where, there's obviously a higher risk for things to go in ways that you don't want to. But so far so good, and I'd say, business is doing great. Now, I kind of stepping away from kind of the broader market and what's going on, I would say I'm gonna leave the conversation about retail to later in our chat, but there's definitely been a slowdown on retail. That's for sure. I think that's a global phenomenon. I don't think that's localized to the UAE. But I would say there's the opposite that we're seeing in the institutional and the corporate side. So even though price is not where everybody would want it to be, I would say activity is very, very high as it relates to a couple of things. One, I would be able to confirm that at least one, and possibly in the next coming weeks, two sovereign wealth funds have been accumulating spot Bitcoin specifically without naming names. And I think we're very excited to see that switch that has happened. And I think this low price point is seen very much so as an entry level for a lot of those mega funds that have the patience to be able to go and accumulate over a long and extended period of time.
So like for, a retail investor that's listening right now, what does that mean for Bitcoin and potentially Bitcoin's price then over the coming months with, one, maybe two big sovereign wealth funds joining Bitcoin?
I'd say the impact is not going to be sort of a massive sort of cascading impact on the market immediately, but I think it sends a very clear signal to, let's say, other institutions that are maybe sitting on the sidelines and looking at these larger funds as kind of leaders of delving into the asset class as a way to experiment and start to get involved. I think that's a very important thing for people to kind of keep in mind is that one big fund trading is not going to necessarily move the market because they're likely to trade OTC. And trading OTC often leads to sort of minimal market impact. And so I do think this is what it will happen is that over the longer term period, we'll start to see Bitcoin becoming more and more scarce as a result of larger holders with much longer time horizons on their holding periods as far as looking at investments. I think moving away from the investments point, though, one of the other observations that we've had, especially with our client base, is that the small to medium corporates have started to enter the market in a very meaningful way. Not necessarily in terms of investing as far as kind of looking at Bitcoin and altcoins, but rather adopting the use case of stablecoins as a function of treasury for remittances and for cross border payments. I think this example is one that I think often you won't see in sort of regions where there is a unified banking system and settlement is quick across border. For example, you don't often see this in Europe and you don't often see this in the United States, but it's very meaningful and impactful in places like the Middle East where you have different banking systems in different countries, and it becomes very difficult for, let's say, businesses that do cross-border business to effectively settle payments or receive payments and manage their treasuries accordingly. And so we're starting to see a big uptick in terms of clients coming just for that explicit purpose.
Now, can you talk to us a little bit about institutional appetite as well? And I guess, given you were talking before around the entry point, I mean, I do want to ask you, of course, like I'm asking everyone at the moment, have we reached a bottom yet for Bitcoin? But we'll get to that part next. But just in terms of general institutional appetite and what you're hearing around, the conversations as well, has the sentiment changed at all? Or do you feel like people are more bullish than ever because they realize that, this asset is here to stay and, the price that it is now is almost is over half of what it was back in October?
Interestingly, I think that we're in a weird place in the market in general. I think that you've got retail that are kind of bearish in general. People are saying Bitcoin is dead. I'm seeing a lot of narrative around Bitcoin being sort of, boring more than anything
Yeah.
else. And I think boring is the key defining word here, which I think is not necessarily a bad thing. It's a sign of a maturity in the asset class and a maturity in the industry where attracting institutions who are excited about it aren't going to be going and making social media posts about their trades or about the fact that they want to integrate, USDT or USDC into their treasury functions. This is just something that they don't talk about. They'll come and have a private conversation with us and ask for, an account to be able to do these things with us, but they won't necessarily go and scream at the top of the balcony that, hey, we just did a cross-border settlement using USDT. That's just not a thing.
Do you think those days are, because last year we saw a lot of that with Bitcoin treasury companies and the whole boom and buzzword around that. Do you think that whole phase is gone now of companies trying to use Bitcoin to really just revive a boring company and make themselves exciting again?
Not necessarily. I do think that'll come again as soon as we kind of get out of this bear market and go into kind of a qualified bull market. I do think that'll make a big comeback, and we'll start to see those things happen again. And so I don't know. I think that it's more about sort of smaller companies that don't necessarily have a B2C marketing presence, don't have public stock that they're selling or marketing to investors, but rather have a genuine, I need to shave cost and time off of my settlements. And I think that's one of the most genuine use cases that exists in crypto, at least that is functionally proven to work through
Mm,
stablecoins at this point in time. I'll give an example. Like a very clear example to me is let's say we have a client who trades between Oman and UAE. That client needs to make payments to their vendors or whatever, their bank, their whatever it might be. They need to essentially move assets from Oman to UAE. They could do this through the conventional banking system, but this may take up to 5 days. And we've tested this. So sending a wire, for example, from a local Omani account to a UAE local account in the respective local currencies will end up ultimately costing the client 2 to 3 to 5% in some cases, and up to 5 days in wait time. Now,
mm,
this sounds like it's normal from the perspective of international banking and financing, but consider this. The driving time between the UAE and Oman is about 4 to 5 hours. So if you were to withdraw your cash and drive it across the border and make a payment, it would happen faster
mm,
than a bank wire. There's just something fundamentally wrong about that. I think this has nothing to do necessarily with compliance or with AML because we've got tools to make these things happen near instantaneously, the correct checks and balances. But there's obviously outdated methodologies being used, and stablecoins provide a really elegant solution to this, where effectively you shave off a huge amount of cost from the client and you shave
mm.
off a huge amount of time, which translates to benefits to all parties involved, and potentially a chain reaction where perhaps the recipient ultimately of the USDT that the client has purchased now has a desire to learn how to use it themselves in their own businesses. and sort of this, I guess, boring SME style growth of an asset class or use case takes place and takes shape, which is, interesting to me, but maybe not interesting to, someone who's looking for the excitement that Bitcoin once had.
Now, you mentioned AML just now and at the start of the chat as well, and you said that the regulators are putting more efforts into that around crypto. Can you explain that a little bit further and give us a bit more insight into that as well?
Sure. I think, look, we've always had a global, very high standard for AML and KYC and all regulatory aspects in the UAE. We have an advanced regulatory system and framework that we've been operating under for a long time. And I'll talk about the innovative parts of what they're doing, which is interesting on the tokenization piece, which is where I think the future is going on, where at least in the UAE. But the war obviously brings different kinds of complications where you'll have obviously nefarious actors looking to launder. And oftentimes they will look at asset classes like crypto as a vehicle for laundering. I think there's been some news articles coming out of, the IRGC willing to accept Bitcoin payments to allow ships through the strait while it was blocked and things of that nature. And sort of the controls and checks and trainings put in place by our regulators are for firms like us to, one, be able to educate our clients to be careful, and two, for us to avoid getting into situations which we would not want to even by accident.
Absolutely. Okay, so let's move on to, I guess, what retail investors want to know now, Basil. Bitcoin is around $60,000 right now. Do you see more downside? I mean, we're getting both sides here. We're seeing some people thinking it's going to go down maybe to $40,000. Others are saying it's going to rebound back up to $75,000. What are you seeing right now in Bitcoin's price?
I mean, personally, I haven't sold yet. I'm still holding for my own holdings. 40 sounds scary to me, but ultimately it doesn't sound totally unreasonable. I'm not going to necessarily call a bottom, but what I will say is there's a lot of interesting indicators in the market that are happening at the moment. Well, for example, we have crossed below the 200 weekly moving average, which is interesting. That only tends to happen when there is capitulation at the bottom of a cycle. October is the standard 4-year cycle kind of time frame that we all historically look at. I know there's been a narrative around how the 4-year cycle is broken. I'm not entirely sure it's broken from my perspective. I think that it's still intact. And
Why not?
also there's
So
there's the
why do you think it's still intact? Is there a reason behind that?
look, as Bitcoin prices have gone down, more miners have gone online again. So the cycle continues. I think it's you know, there's no direct reason for it to have been broken that I can see. And so the narrative of it having been broken by sort of mainstream adoption doesn't necessarily hold, because although mainstream adoption is taking place, price doesn't necessarily reflect it. Volume does. Volume is there. And there's definitely new participants entering the market and buying up.
Why do you
What
think there was so many people excited around the potential that the 4-year cycle had finished then? Because, towards the end of last year, especially when Bitcoin was around the highs, it felt like a lot of people were just thinking it was going to keep going and we are going to go into 2026 and reach new highs again. And now, analysts are tipping, minimal odds of even reclaiming the highs that we saw in October for
I
this
don't
year.
I think the my view on it is that we still don't have complete global regulatory clarity. And I think that still is, in my view, the main narrative holding back Bitcoin and crypto adoption, because there's a lot of firms that err on the side of complete conservatism. And so there'll be firms that don't even offer Bitcoin products or crypto products or tokenized products and won't until a regulator tells them that it is 100% okay, non-controversial, and you won't get in trouble for doing it. And that, although that's happened in places like the UAE, it hasn't happened yet in other parts of the world. And especially we're all waiting to see what happens with the Clarity Act as well in the
Mm.
US. And I think that's going to have a much bigger impact on, you know, I would say a bullish sentiment. But I think, the narrative and the movement of price don't necessarily always correlate. I think often we look for narratives to kind of justify a price movement. And
Mm,
so I think
mm.
the excitement for people to kind of get into Bitcoin is, people need to kind of remember that the cycle is likely to flip at some point soon. mainly because we look at sort of historical indicators as hints for what may happen. And what may happen is, okay, one, we've talked about the 4-year cycle of October. We are looking at potentially a 79% of all Bitcoin supply that's still held by private holders. That's not a huge amount of supply that's circulating at the moment. And we are only 9 months into the bear market, when bear markets historically have lasted 12 to 14 months. I think, you know, we are likely near the bottom, but it's going to be nearly impossible to actually call the bottom and say, okay, we flipped and people are valuing the asset again. I don't think the narrative for Bitcoin's utility has fundamentally changed. It's a store of value. And I think especially for those of us that are under 40, we view it as digital gold. I
Hmm.
still view it this way. I think it's the only way you can carry this much value on your person or within your total control, which you couldn't in any other asset class. Not really. And I think that still very, very much holds in a world where, inflation doesn't seem to be seeing an end. And I think, interest rates don't help either in these situations. And so I think these things both have to change for us to see a fundamental narrative shift, or we just wait for the 4-year cycle to go on as normal.
And you mentioned the Clarity Act before as well and said that might have a positive domino effect. How will the Clarity Act, obviously it's massive for the US, how do you think that's going to impact the rest of the world, prices aside, but more so broader in the global industry? How do you think the passing of the Clarity Act is going to positively affect the rest of the industry around the world?
So the US is always seen as, the financial market leader of the world. And so a lot of, I would say, investment advisors, investment companies, essentially the people that are doing the majority of mainstream investment product sales are more often likely to take a conservative view, sell what they can sell, rather than sell something that they're worried they might get in trouble for. And I think that the Clarity Act, especially for those that are perhaps operating in partnership with, major financial institutions in the US, um, are more likely to adopt once they have that clarity, knowing that they won't, for example, lose their rails on the back end. I think we've definitely seen this in banking. We've seen localized banks hesitate to bank crypto firms, at least for an extended period, mainly for fear of losing their correspondent bank accounts. I think we talked about that last time. I think that still very much holds today. Nothing has really changed. And so until there is clarity, it won't change.
And I guess just talking with your institutional clients in the UAE as well, is there anything particularly that they are waiting on the sidelines for with the Clarity Act as well? Is that something you feel like they're going to have a big change in how they view the crypto asset class as well once that passes over in the US?
But yeah, for sure. So again, it all boils down to access to banking. I think fundamentally there is interest and appetite for the crypto asset class, tokenized assets, doing all the things that the industry promised that it would do in terms of elevating particularly the financial services industry, which at least is where I feel I can speak to the most. But we haven't reached that point yet because there is still a huge part of the market that is terrified of losing their conventional banking rails just for transacting in crypto. And these it does happen. So I have seen clients, you know, not inform their bank that they're going to be doing a crypto treasury transaction and, essentially have issues as a result of it and have to go through, a million compliance filings to get their accounts back to normal. I think a lot of firms don't want to have to go through that and would rather be patient and wait. Whereas I think individuals have gotten more excited about prediction markets, have gotten more excited about the AI boom. And I think that the AI boom is not entirely independent of crypto. I think, I'm of the camp that views that tokenized products, blockchain finance will be the money of AI. I'm on that camp as well.
And there is a whole debate around whether the AI boom has sucked capital away from crypto and, it might be one of the catalysts why the crypto market has been lagging like it has been this year. I mean, are you of that opinion? And do you think that maybe there might be a rotation back from AI into crypto eventually? Or do you think that they can both coexist and there's not too much overlap where it's going to matter so much?
I think it's a coexistence point. I think that we're still at the very early stages of both industries. Obviously, crypto has a few more years, at least in sort of people's eyes and people's portfolios. But I do think that there is a convergence that will happen between the two, where effectively AI will be integrated into different industries. And I think that in finance in particular, crypto is going to play a very big role in terms of how AI will offer financial service. I
Mm.
think that's something that's I'm waiting to see, and I think a lot of firms are building and integrating. So I don't think that they're independent. I think that they're interlinked. It's just a question of breaking out and seeing more specialized activities and opportunities to come up.
Do you think there's too many sectors in the crypto industry though?
I do to some extent, because not all of them are necessarily providing a utility. But I think that a lot of the capital that was going into sort of, the fund sectors, I like to call them, are now mostly going towards prediction markets because it's faster dopamine.
Yeah, absolutely. And then what's your thoughts on prediction? What is your prediction on the prediction markets over the coming years as well?
I like them. I think it's a fantastic use case for kind of trading and option trading market technology and sort of making it much more broad, much more engaging with users and more exciting. So I think that it's not inherently a bad thing. I think it's a good thing. And there's as long as there's guardrails for people to not sort of, conduct bad financial behavior. And I don't mean bad financial behavior by sort of making bad investment decisions. That will happen. People will make good decisions, people will make bad decisions. I mean bad decisions in terms of deliberately kind of harming their own portfolios or their own kind of financial profile by getting too wrapped up in prediction markets. I think guardrails are important.
Now, Basil, I want to know from you as well, what is upsetting you around the crypto industry right now? We've heard what you're bullish around, what you're excited around, but is there anything that's particularly irritating you or upsetting you around the crypto industry that you thought might have come to fruition by now, or just something that's just you feel is a real bottleneck in the industry?
So I think that there's a couple of topics that I'll touch on this because this is a great question. I think that there's the idea of tokenization hasn't quite picked up enough steam in most places. And at least if I were to summarize what I think is the major driving force holding it back, it has to be cross-border regulation. Because for example, we'll have, which is true now. In Dubai, you can buy tokenized shares of real estate property in the city of Dubai. Residential real estate property, it exists. This is regulated. This is a real product. You can use crypto to buy those tokens. You can hold those tokens. This is a totally real product. We are in development right now, working closely with our regulator to create other types of financial products. For example, tokenized stocks, private markets, debt. But I think that we're still very early in a market to sort of accept this because people often chase liquidity. And so if you're starting a new market, it's going to have minimal liquidity when you begin it, unless you take some very, very intelligent approaches to sort of having two parallel tracks where you offer the traditional product and the tokenized product side by side in order to gain that adoption. I think the drawback to that is that people will often make the lazy approach and pick the traditional product just because it's what's tried and tested. And I think that does frustrate. I think the lack of sort of desire to try something which might, actually bring about more efficient business, more efficient savings, more efficient investing and settlement is often overlooked because something is just has been done before and it's just tested. So it does frustrate me. I think the other point that I would say that frustrates me the most is the narrative around quantum. So at least as far as my understanding, which is limited, I'm not a quantum expert or anything like that, but my what I understand is that there's only a very small subsegment of older wallets that would be impacted by quantum. And most of the newer wallets, bank systems are secure against quantum, or at least will be on time. And I think that kind of removes or should remove a lot of fear from people saying, okay, well, I don't want to get into Bitcoin because quantum's going to crack all the wallets. Well, that's
Mm.
simply not true. That's not going to happen. Maybe some older wallets will get opened, but others won't. But I think CZ said an interesting thing the other day, where he said we should just freeze Satoshi's coins because that's what people are really afraid of, is Satoshi's coins moving. And I think that's a wonderful idea. I just don't know how we would actually do it and enforce it, without imposing some kind of restriction on those particular addresses, at least
Mm.
collectively as an industry, not an official legal restriction, just kind of a accepted, nobody does business with these wallets because they must remain as they are.
Yeah, I think, some people have been saying 2027, 2028, quantum could actually become a serious risk to Bitcoin by them. I mean, more of the aggressive forecasts. And then there's obviously many industry executives as well that are saying 2032. So, what's your thoughts on the more aggressive 3, 4 year timeline that quantum has of potentially becoming a risk to Bitcoin?
I mean, what is the risk to Bitcoin? As I was saying earlier, is it the newer wallets which are already prepared,
Yeah.
or is it just the Satoshi wallet as the main risk? And wouldn't the market understand that if the Satoshi wallets are at risk, then that there's ways for the industry to protect itself outside of purely technology? For example, imposing a freeze, as CZ was suggesting, as I said earlier. I'm totally in favor of this because sometimes the simplest answer is the right answer, and I think in this case that is exactly it. Whether it's an accelerated quantum development or the longer timeline as it as it currently was estimated. But I'm not of the view that I can opine either way, whether it's going to be faster or slower. I am of
Mm.
the view that, the industry is getting mature enough and smart enough to be able to handle a risk like this and to manage around it, both in terms of systems development, but also in terms of developing kind of etiquette around how we do business.
Amazing. And just to wrap it up, Basil, as well, I want to hear from you what you're most excited around for the crypto industry, I guess, for the rest of this year. We've only got 6 months left, but also then looking ahead to that 2030 mark, which seems to be a nice round number for people to speculate and have their big opinion on what's going to happen over the next 4 years.
Amazing. So I'm most excited about seeing the first tokenized financial products trade on a regulated trading venue. I do think that the UAE might become one of the first jurisdictions to be able to offer this, and it's sort of outside of just pure real estate, which has been done. What I've always been excited about since my background was in private equity before is to create tokenized private markets. And I think that's a super exciting prospect in terms of allowing a category of investors to access markets which historically they have been kind of isolated out of because they didn't have the capital to sort of access them. And I think that really changes the game. My longer term prediction, and this has always been the case, is that we stop talking about blockchain and crypto as kind of the mainstay feature. We talk about the actual underlying product and just assume that blockchain and crypto is offering the infrastructure on the back end, and that should be where we're at in the next 4 years. I also think that that there will be a very distinct difference between, you know, public and private markets in terms of size and prestige. Like, I don't expect the major stock markets to just disappear. I think they will continue to exist in their forms. But I do think we will see the emergence of private markets that are specialized in lower market cap companies, lower market cap products, and to get very creative on how I would say entrepreneurs, small to medium business owners manage, raise capital, and essentially distribute ownership into their companies, which is exciting to me. And I think that's going to help drive a whole new category of entrepreneurs into the market that do a whole bunch of different things in different industries.
Amazing. Thanks so much, Basil. I appreciate your time. And yeah, thank you again for joining us on Chain Reaction.
Thanks again. Appreciate it.